traders, here's a new video. First of all, okay, wait, I have to do a call now, because that is one of those concepts which I have explained in my ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you will find also the link to the Facebook group. So first of all, I have to do also the risk warning. This video is not an investment advice, yes, and you have to trade only with money you can afford to lose. So, and that is what I have explained in the ebook. Yes, if you get an a morning star and the next candle is a weak one, you can expect, if the context is right, that the next candle will go up further, that there will be a trend continuation of this new upcoming trend, and that's the reason why I entered immediately into a call expecting that price will go up further. So I will do another call now, because this candle didn't unfold, so we have still the same constellation. If you are doing candlestick math, this candle plus this candle with a longer shadow, which means that we have much more buying pressure now, yes, but at the end it's the same thing like before, yes, and so I'm expecting that price will go up, yes. So yes, based on those kind of concepts which I have explained in the ebook, yes, and you see here really nice how I'm trading this. This looks also like an inverted head and shoulders now. Yes, here a shoulder, and here's a neckline where this kind of candle is stopping by. So let's see what this candle is telling me, because this looks like this candle is telling me nothing. Yes, and I will maybe not trade the next candle, because it looks like we are getting here in the consolidation area. Yes, okay. Price is moving up fast. So if price retraces back to this level, yes, I will enter into a call. So I will prepare already. I push the button, and then if price will come down to this level, I will enter into a call, because this head and shoulders pattern is now starting an uptrend. Yes, but this candle runs already too far away. So okay, that was it. I was not able to enter in this because the price didn't retrace back, because I cannot do now a trade, because I'm sure that price will retrace back, or most of the time it will retrace back, and then you get out of the money in the last few seconds, only because you entered too high in a running candle. And that's the reason why I didn't enter here, because I want to get sure that I don't get out of the money. So okay, let's see. Yes, okay, I will now do a call, because this area here, this outside bar fake breakout of this support and resistance level here, is showing me that this resistance level will hold now. Yes, because we have here an uptrend from this inverted head and shoulders pattern. So I have done here nothing else than a call option on support in an uptrend, and that is the same what I have shown you in the previous video, which was about the double top. Now we have here the same scenario with the double bottom, yes, not with the double bottom, with an inverted head and shoulders pattern, that I trade the upcoming new trend, explained like I have explained in the ebook about the highest probability trading setups. Yes, let me show you this again for those who don't follow this. You see here this one. You get a chart pattern in this kind, an inverted head and shoulders, and then you trade the trend continuation of this upcoming new uptrend. So let me see what's going on here. This looks like this looks like we have another support and resistance level here. Look at this. The change of polarity is also explained in the ebook. So, and yes, and this is not looking good. This is looking like we're getting down, and that's the reason why I'm doing a put here, expecting that price will close below this resistance level of the previous candle. Yes, I have explained how to draw in the ebook, how to draw support and resistance based on candlesticks. Yes, and that is also one of those kind of things. Yes, the upper shadow always of every kind of candle, yes, is nothing else than a resistance level and the lower shadow of any kind of candle is mostly a support level, yes, and that is what I'm expecting here at key level. So okay, that was it already. If you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye. Okay, wait, I see here a fake breakout of the 20 EMA. I'm expecting that price will continue to going down, and that's the reason why I'm doing a put here. I'm expecting that this is only a fake breakout of the 20 EMA. Also, if the market is doing here some kind of panic, I'm sure that price will break through the 20 EMA, because else this candle has moved in a different way. Yes, and that's the reason why I'm entering here. But I used this kind of entry point, which I have explained also in the 7th edition of the ebook. You have to enter above or below the previous candle closing price, yes, to get the best margin of safety. So yes, it was not really a fake breakout. Yes, maybe on the next candle price will go down further, and doing the complete fake breakout, which I was expecting already before. Okay, so that was it. So I would say stay safe and bye bye.